You know what? I'm up 80% in the last 3 years and 1 month, which is kind of crazy through dollar cost averaging. In 2021, when the market started declining, I bought it every single week like we're doing right now. Then, of course, when you start looking at 22 and 23, markets started rebounding, started coming back. I owned exponentially more of the ETFs that I was investing in, and it makes a big difference. And I will continue that dollar cost averaging until that money is gone, which is getting replenished every 2 weeks. So it's never going to run out until I retire and quit doing contributions in there. Now, of course, the other disadvantage, you still have to know what you own. You have to do your own research. You have to know and understand the risk, what you're putting into the ETFs, what you're putting into your portfolio. And of course, a lot of ETFs, if you're taking that long-term approach, there usually isn't a lot of change. Even thinking of something like a dividend ETF like HD, it is rebalanced or adjusted one single time a year. That's it. Talk about a get it and really forget it. As long as you're putting money in there consistently, you're getting a pretty good yield, about 3.4 to 3.6%. You're getting a pretty decent yield. You're also seeing a lot of value, getting some growth out of that ETF. And overall, you can just put your money in there and kind of forget it. So active versus passive, which strategy is really best for you? This comes down to the individual, and this is where you got to sit down, think about your goals. So when active investing is better, you want to spend more time doing it, you enjoy doing it, you like the rise and the falls, you're doing your research, you can really outguess, millions of smart investors that are out there. You don't mind the losses, because if you cannot stomach that, definitely active investing, and again, I've done this before with crypto, is not for you at all. You're looking for mastery, you're looking how to read charts, you're looking how to really pace the market or kind of forecast which way it's headed. Then when it comes to the passive investing, if this is the investor that you are, you want good returns, willing to give up the chase to really get those best or those high returns. You want to beat most investors, even the pros, most of the time with those S&P 500 funds. You're comfortable investing in those index funds, don't want to spend a lot of time, want to minimize that tax liability. And of course, you want a hands-off approach. Similar to me, when it comes to investing, I do passive investing in its entirety. I don't do any trading. If I trade, it might be a rebalance or it might be something that I add, like the Bitcoin ETF. But short of that, not really anything that I'm doing as far as the investing strategy. Keeping it very similar, keeping it very slow and really steady with the 3 ETF portfolio, making it really a big difference, and it continues to grow. We're almost up to $160,000 in the portfolio, so doing incredibly well. So all right, guys, so that is going to do it for the video. Passive versus active investing.